Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our free weekly video report for Thursday, July 6th, 2017. So over really, first of all, I'm sorry for not getting out really any reports over the last 2 weeks. I took a few days off, and it was running into the 4th of July holiday, so I was just took some personal time and relaxed over at the beach, but anyway, during that time, we've been, saying that we're anticipating that this golden halo top is going to be forming, and when that forms, there is going to be a meaningful drop, and nobody was going to believe that the drop was going to really be taking place, and it's going to catch a lot of people by surprise. So we actually made the our top on June 19th, and from there we've actually seen some kind of weak tries to the upside. And if you've noticed, a lot of them have taken place in a form of a gap up, and we're in a downtrend right now. And I'll explain all of that in this video. So one of the things that I say is different between really our service and anybody else out there, because nobody has the data and the information that we provide, and it's the combination of using time, sentiment, and technicals. And the way that I view that is time is when to expect a trend to reverse, and they happen both on a larger, say, turn and just smaller turns. And we're not just a bearish site that looks for tops. The tops are a little more exciting. You can make a lot more money with them, especially if you're a short-term trader. But during these larger, say, interim moves, there's going to be minor lows and minor highs along the way, and they're all projected as well. But the one that we're in and that we're projecting, we already have when to start looking for the first low. This is an interim one, and this is could shed some points off, even if it happens in a very short time period. It's one of those things that it's not something that you want to fall asleep on, because it's you saw today the S&P was down 23. It's one of those things that this market moves really fast, but the sentiment is the why, and that's where a lot of the patterns that Woody comes up with are based off of the sentiment, because he's pretty much been the pioneer of investor sentiment. He's been doing it for 40 years, and it's why a lot of the largest institutions in the world rely on his sentiment data, because he knows how to read them and knows the psychology of the market, the psychologicals of the market, and we're able to come up and back up the say the time period that he's looking for the reversal, and it's based off of a lot of it is what the sentiment is doing and where the herd is really leaning at the particular time, and then we're able to kind of show where the trend should reverse, or this reversal should take place, because it's really impossible to start looking where if you don't know when. And if you don't have investor sentiment, at an extreme, because that's when almost every major turn or even an interim turn takes place with sentiment extremes, which you'll see in this video right here. So the fact that we could use the time, sentiment, and technicals gives you when to start looking for the reversal. Why is the herd all leaning on the side that the market's going to reverse, because they're going to be wrong 99% of the time, and then where. So this was from our today's report, and what Woody had said was that the golden halo peaked on June 19th. Recent bounces remain unimpressive. As noted last week, if you're short, you can put your stop near 2460, but the timing profiles are beginning to be on your side. So we're coming into this period where we've been expecting weakness, and basically what we've been telling members for the last month when to expect the weakness to hit the markets. Now, downside pressure seems to be occurring, and that may still stay in slow motion, because we've seen what happens when we're making these tops is that you get people that buy the dips over and over. So you get a drop, and then it gets bid back up, but eventually you don't make new highs, and that's when things crater and you see massive moves. in usually on the downside because everybody's leaning on the long side and expecting the market to bounce. So we know when to expect more negativity. Unfortunately, I can't tell you in these videos, but what he says, it's amazing how convincing all the talking heads on the financial television think they are. They speak as if they really know something. Their obsession with fundamentals, whatever they are, hypnotize them into whatever story seems important. So we haven't had too many important lately, just over since last week actually, important sentiment readings. But that's fine. That all fits the profile. Expected for the weeks the golden halo is forming. There's better negative indicants, and that's again we can't tell you these dates. And then now that the interim high is in golden halo is in place, that again we can't give you these dates, but vulnerability is due to continue and increase. So we're in this time period that we are that we expected weakness to hit. It's coming right now, and we know when to expect the selling to pick up, and we actually know when to expect a low. So a lot of traders right now are going to be buying the dips because they've been programmed to do it, and it may work on a short-term time period. But unfortunately, what happens is they buy it, and then we get these big moves to the downside, and they get stopped out, and then eventually, when they switch over to the short side, it's typically when sentiment is reading extreme bearish readings, and that's usually when there's a time period to expect a low, and that's why with knowing when to expect these reversals to hit and knowing what sentiment is and how the majority is leaning towards the market. um, you kind of get a head start, and you could position your portfolio properly, so then when you get these moves, the big moves on the downside or even on the upside, you're positioned ahead of them. And if you're a short-term trader, what you do is you just kind of if let's say you're shorting right now, you get into some support areas. If there's technical buy signals, you can cover some shorts and just re-short the when we get the bounce, and just continue this over and over again until we reach the specific low date that we're looking for. So, are the turn dates, do they work? This is just an example I've been showing, and what he said was that there's for the last 2 weeks he's been saying there's a generic trading high on 510 and 515. This was 510, this was 515. We saw a big drop. Again, it wasn't the big one. We had a bounce in 515, and then we had a bigger one. So these dates aren't just pulled out of the blue on this. They work. And especially when the interim tops hit, then you get these big moves, and that's what you have to really be positioned for. Because one of the things that Woody's, we talked about was the golden halo in 1987 when he, was putting out his institutional newsletter, and the S&P lost 37% in 3 weeks. Am I saying that's going to happen? No, we don't predict that far out. Is there a possibility it could happen? Yes. Is there a possibility that everybody will be buying this dip and then miss this? Absolutely. And this is just an example of why it could happen. And this is just a wave structure where whenever you get a wave five into whenever there's 1 5, what happens is you're going to get a 4, and then there's going to be another 5. So here you can see an example of it. 1, 2, 3, here's your 4, and now we're making a 5. So this pattern right here is looking for another wave 4 that could bring the S&P as low as 1772. Now, if it was going to just follow the 1987, this is just half of that, and it brings the S&P down to 2013. If it did to just 36%, that's a 1% less, 1571. Now we have a 38% retracement, which is 1772. So you can see why something like this could play out, and we're not predicting this is where it's going, but the wave structure, the bearish divergences, and everything else is in place for something like that to hit. So if we just take a look at the regular charts on the short term, here you can see these have been the previous moves, the larger moves that have taken place. And you can see right here, these are the smaller moves. So if the S&P is changing guard and we're moving into a different, say, profile here, what's going to happen is the bears are going to have to push through this 2403 level because that's the previous smaller moves. And if it does that, that's when you just anticipate that the next move's coming down to the 2376. And if it really starts to pick up momentum, I wouldn't even be looking to buy until we hit the 2296. Now, there's reasons to believe that we could get some kind of little bounce on tomorrow. And the only reason for that would be is we have some bullish divergences that are forming. But technicals are, they're not in line right now with when Woody is anticipating the low to hit. So the bounces, I would be using them to short. And if you're short, you know where to put the stop. There could be a lot more points that are ahead of us right now, and it's going to be a fun ride. So I'm not sure what the actual special is going to be out tonight, but again, we're only taking a handful of new subscribers at these special rates because we know what's coming. We don't really need to give discounts, but we do want to give people an opportunity to join. So with that, be careful. If the Bears push it through this 2405, most likely we're coming down to the 2390, 2375. Bulls need to get it back above the 2431 to get some kind of control back. So with that, enjoy your weekend and have a great night.